Holy cow, does the media know how to get people's attention? I've never gotten so many phone calls and messages about something that was announced on the news that day. This is a snippet from a news this morning about costs for getting a mortgage decreasing for people with lower credit scores. But the way that the media likes to twist this information is it's borderline hilarious. People, remember, their job is to sell ads. That's what they're doing. They're selling advertisements. And how do they do that? They get your attention. This is a great way to do it. Just it seems like it's something crazy that's going on, but in reality, it's not that complicated. So I'm just going to go over the basics of what this is about, so that everybody can kind of get an understanding for what we're looking at. Because there is everything from the truth out there to straight up lies. I mean, you see this information that is completely incorrect, and then stuff like this that's just tweaked just in the right way to kind of get your attention. So this one here, for example, 620 FICO score gets a 1.75% fee discount, while a 740 FICO score pays a 1% fee. So this all has to do with something called a loan level price adjustment. So LLPAs for short. So back in 2008, when everything fell apart, and Fannie Mae and Freddie Mac had no capital. In fact, they're losing money year over year. The government put in place this thing called a loan level price adjustment. So basically, making it so that there is a dollar amount that's kind of wrapped in. You can look at it like it's wrapped into an interest rate. And so that's what makes the interest rates go higher for lower credit scores, or lower for higher credit scores. And so just kind of incentivizing people to have, making it easier on people with better credit, because with people with better credit, there's less risk. And so you pay less for a mortgage. The way that the media likes to portray what's going on right now is actually, let me hit rewind. So they decided, okay, with these loan level price adjustments, it has gotten very difficult for first time home buyers to buy a home. And so they decided in January, it was actually announced in January. For some reason today, the media just decided to go crazy with it, that they are going to decrease the fees for, or these loan level price adjustments for people who are kind of in that first time home buyer bracket or lower credit score bracket. Does it mean that they're getting a better deal than somebody with a higher credit score? No, it doesn't, even though that's what this says in this ad, or this whatever this is. That's not the case. And so it's something that the information is out there, and you can actually look it up. For it, actually, the part here about mortgages to increase for credit scores over 680, this is just, it blows my mind, because all of this information is public. You can go on. You know what, here, let's do this. Let's do a Google search, find out what the LLPA are. So let's go loan level. Okay, here we go. Loan level price adjustments. Okay, first thing that comes up here, Fannie Mae. That's where you want to get your information from, directly from the source. Don't get it from these media outlets who are just trying to sell ads. Fannie Mae is not trying to sell ads. So this is their actual PDF of the matrix of what the loan level price adjustments are. And this is the actual information. You can please Google this, look at it. So here on the left-hand side are credit scores. Highest up top, lowest down low. Then along the top right here, this is your amount of the down payment, the buyer's down payment, okay? So let's just focus on one line here, one row, just to so that we know what we're looking at. Let's look at 740 to 759, okay? So as you go up to, let's go to 80%. So when you put 20% down, there is a 1% loan level price adjustment that gets wrapped into the interest rate. So where this person might have qualified, say, for a 5% interest rate, now after the loan level price adjustment, they're going to pay a 6% interest, or get a 6% interest rate. That's what a loan level price adjustment is. So this isn't new. Since 2008, there have been loan level price adjustments, and they were higher than this. And especially so here, as you go down the line, so same 20% down, as you go down the line, you're going to see it go up from 1 to 1.25 to 1.5, 1.875, all the way up to 2.875% loan level price adjustment for someone with a credit score of less than 639. So what did they say on Fox? Where's that? 620 FICO score gets a 1.75 fee discount. 740 FICO pays 1%. So they're saying 740 pays a 1% fee. Let's go back to our graphic here. 740, yeah, they pay a 1% fee. So that's not new. This isn't something that just got added in. What did happen was for these guys down here with the lower credit scores, now it says 680 is a 1.875. Well, this used to be up in the 2%, 2 point something percent. So the idea and the goal here is to actually make it a little bit easier for first-time home buyers to qualify for a home. Do they get more of a discount than somebody with a better credit score? No. Are we rewarding them for bad credit? Absolutely not. They're still paying more than somebody with a better credit score. The only thing that could be picked out here for me is that what I find interesting, and maybe I'll do another video on this in the future, is that here 80% or 25 to 20% down payment. Let's go back to let's do the 720 to 739. You're paying 1.25%, 1.25%, and then you put 15% down and you're paying 1%, 5%, 5 or to 9%, 9 point whatever percent, you're paying 0.875, and then less than 5% down payment, you're paying 0.7. So your risk is actually going up here, I would think, with the lower down payment. But the people paying the 20%, 25%, they're paying actually a little bit more as a part of their interest rate. So that part of it to me is interesting. I'm not really sure why that is. I'm sure there's something that has to do with risk when you put 5% down versus 20% down. I'll look into that and do another video. While we're on the topic, I don't know if it's too much information or if that was enough, but there's all different types of grids in here so that you can see this is a huge one this year, and I would think that the media would talk a lot more about this. They changed this last year for an investment property. When you're buying an investment property or essentially a second home, right now is I think all the same pricing right across the board. You are looking at massive loan level price adjustments right now. So buying a second home, if you put 20% down, they're going to add 4.125 into your interest rate. That's huge. All the way up, if you put more down, obviously you get a little bit of a better interest rate or an incentive to put even more than that down. But you would think buying a second home with 20% down, you wouldn't have to pay very much of a loan level price adjustment, but they're just looking to, in a way, discourage people from doing that and make some money to build some capital in the meantime on that. There's a bunch of different grids, but those are the main ones to look at. So yeah, the fact of the matter is, and what's important here is, if you have borrowers who are talking to you, if you're a buyer and you're wondering what's going on with this price adjustment, just make sure that you're talking to a mortgage broker who pays attention to what's going on and is aware of what's happening in the industry. As mortgage brokers, we can shop around to multiple different lending companies and find you the best interest rates, lowest closing costs, because these vary. There's different loan level price adjustments. There's different price adjustments depending on the lending company that you work with, depending on a bunch of different criteria. So make sure you're just working with somebody who's going to go out of their way to find you the best pricing and take care of you so that you save as much money as possible. Any questions, please feel free to reach out. I'm happy to answer anything. Mike at Eagle and Financial.